Hi, everyone. Really excited to do this webinar with you today. And Gino, what's happening? Say hello.
Razia, how you doing?
This is great. I'm super excited. So Gino Benedetti is, and obviously you can introduce yourself, but Gino has been in insurance for many years. So we've known each other for a long time. And he's one of the sharpest minds in insurance out there. And so my hope is on the webinar that any of you watching will get a real good sense about what is homeowners insurance, why it's important, what you should be aware of, cost, all that kind of thing. Gino, anything else?
Yes, no, happy to be able to do this with you, Raziel, and hopefully your clients get some good information from this. And I'm a partner at Calendar Robinson, which is a boutique insurance brokerage in San Francisco, and we represent numerous different clients and carriers, and offer competitive rates with many different carriers and insurance solutions. So I definitely think this is a great opportunity. So thank you.
No, absolutely, Gino. So maybe you can give us like just quick overview. Obviously, homeowners insurance is a no-brainer. Everyone buys it when they buy their home. The bank requires you to buy it just to make sure that their investment is insured as well. But just kind of give a brief overview of what's included.
Yeah, I mean, homeowners insurance is made up of coverages that will help protect the homeowners from certain events that could cause either property damage or bodily injury. And there are four key parts of homeowners insurance, starting with the dwelling coverage, and then also having other structures, personal property coverage, and then personal liability. Those four key coverages make up what homeowners insurance really is all about. And we can dive into what each of those coverages mean and how they may pertain to different homeowners.
No, that's helpful. So obviously you have those four different lines, and what are additional types of coverage that one can get in addition to those?
Well, a standard homeowners insurance policy will never include earthquake or flood. So you always have the option to purchase a separate insurance policy to supplement your homeowners for earthquake or flood potential disasters.
Okay. And then going back to like the four main types, can you kind of talk about things that people should be aware of, why they're important, any red flags, and just kind of generally speaking about those?
Yeah, so I mean, the main thing is that properly insuring your dwelling is probably the most key aspect of your homeowner's insurance. Here in the Bay Area, we are seeing some of the most highest or most costly construction costs throughout California. And when we're talking homeowners insurance, it's very important that each homeowner comes up with a value to properly insure their home. And this piece of coverage is considered the dwelling replacement coverage. And what we do is we have different models that we use to help determine the proper replacement coverage needed. And typically it's a price per square foot model, but it really does have to, there are other factors that determine that as well. And really based upon where the home is located, and then the certain features of the home, whether it's been recently updated, is there hardwood floors throughout versus carpet, are there granite, marble, tile, or is it just paint on a wall? I mean, those certain factors really do increase the overall cost of construction and need to be factored into determining the proper replacement costs.
That's actually good to know, because I've looked at a lot of quotes from clients over the years and from a national carrier that might not have much of a presence on the peninsula. And I've seen like replacement square foot costs of like $200 to $300. And normally in my experience, it's at least $400, $500, $600 a square foot, right?
That's absolutely correct. The days of insuring your home at $250 to $300 a square foot are over, unfortunately. When I first got in the business 15 years ago, I think that was what we were using back then. And you're right. I mean, anywhere from $450 all the way up to $650, $700 a square foot, depending on the quality of the home and where it's located. And as I mentioned, the cost of construction is really what's created this. We want to insure the property to its full replacement value, not including the land, because the land is the most expensive asset here in California, but we're not insuring the land, we're insuring for replacement of the structure. And we always insure for full replacement. God forbid if you ever sustained, or a client or somebody ever sustained a total loss, we want to make sure there's enough coverage to fully replace your home. And that is a good segue into what other coverages come along with homeowners insurance. Not only replacing your home, but also replacing your personal property, your belongings, your furnishings, your clothes, your furniture, your appliances. This is a separate coverage underneath your homeowner's policy that typically is about 70% of the building coverage limit. So for instance, if we were to insure your home for $1 million, you would automatically, as part of the homeowner's package, get $700,000 in contents replacement, personal property replacement coverage. And along with that comes other structures coverage as well. And other structures typically tends to be about 10% of the building limit. And the other structures could be used for repairing a fence if blown down from a windstorm, or damaged from a fire. Could be a detached garage or a detached structure that's on the property. And that, typically that's where we see most of the other structure coverages and claims come from, or just, fences. And, in the Bay Area, we do have, a period of time where, winter storms and high winds come and may blow down your fence. And, having that other structure coverage there will help replace your fence if blown down.
Gino, are there any areas, like, obviously since you know the peninsula super well, that someone cannot get homeowners insurance? Like, should that be a concern for a buyer buying a home in Burlingame, Hillsborough, San Mateo, San Carlos, Redwood City? Like, these are pretty like suburban areas, not like high. I mean, there's trees, but it's not a forest. Like, is there a concern, or what are you seeing?
Yes, there is a concern, and this is somewhat recent, Raziel. Within the past year, we've seen every insurance carrier rezone and remap their fire risks, and they've remapped all of California. And unfortunately, we're seeing that some areas in the peninsula and all throughout California have had greater fire risk scores more recently than ever, and that it does impact one, potential pricing, but also the availability of the carrier pools in that area. Unfortunately, we're seeing a lot of areas in the along 280, along Woodside, where there is that brush along the hills, right, and a lot of density of trees that have caused these insurance companies to rezone, remap, and unfortunately refuse to offer insurance in some areas. So absolutely, it's definitely been a challenging time for finding the perfect fit for homeowners, finding the right policy, the right coverage, and then obviously the most competitive price policy out there to ensure that, one, you're properly insuring your home, but two, you are getting the most competitive price product that's out there.
That's interesting to know. I've also found it interesting how efficiently priced homeowners insurance is. So, like, you could buy a $2 million house and your homeowners insurance cost could be $1,500 or $2,000 a year. Like, to me, that doesn't sound like a lot, but as you mentioned, most of it is in the land and you're not really insuring the land. So I think it's a nice surprise, I think, that a lot of buyers aren't aware of.
Absolutely. No question about it.
Can you kind of chat about kind of like extended coverage as well for dwelling? I believe that's another coverage, like where you can get up to 150 or 200%, or how does that work?
Yeah, so every carrier handles this differently. Okay. And it's a case-by-case scenario depending on what carriers we quote and recommend and see as a good fit for each homeowner, depending on where the home is located. But for instance, the homeowners policies are package policies. And so within these package policies, there are enhancements that the carriers offer. One of these enhancements is called extended replacement coverage. And the extended replacement coverage can be anywhere from 125% all the way up to 200%. And it's built into the policy and offers either a 25% additional coverage onto the building limit or all the way up to 200%, 100% of the building limit. So for instance, if we have you with a carrier that offers 200% extended replacement coverage and the building coverage that we have on the home is $1 million, that enhancement essentially gives you an additional $1 million in coverage, and it's built into the policy for unforeseen increased cost of construction, inflation, and just basically to ensure that you are never underinsured. So yeah, I mean that's a key point and a key coverage for when deciding on the best homeowners policy and which carrier to go with. I think that should definitely be considered, hands down. We represent numerous different carriers, and the most common extended replacement coverage that we see is about 150%. And I think that 150% can go a long way in making sure that a homeowner, if a full loss is sustained, is not underinsured.
And can you kind of talk briefly about like other types of insurance that if you're buying a home on the peninsula, you should be aware of? Like, for example, having an umbrella policy. I assume like it's definitely not required, but can you talk about what that is and why that would be helpful?
No, absolutely. Well, with the homeowners package policy, we identified the 4 different coverages: the dwelling, the other structures, the personal property, and then the last one would be the personal liability coverage. That's included in your policy. Standard limits of personal liability tend to be around $500,000. That will come with your homeowners package policy.
Got it. Okay. But if someone wants something more significant,
may not be enough, nowadays to protect your family.
I mean, I think it could be, having more, I think could, a lot of people are like, oh my God, what if someone slips and falls in front of my house? They could sue me for a lot of money. So, I mean, I've seen clients, who have had umbrella policies of $1 to $5 million. What kind of cost is associated with that? And why is that a good thing to consider?
Yeah. Well, what's great about an umbrella policy is that it blankets not only your homeowner's liability, but also blankets above your auto liability as well.
Okay.
And truth be told, everybody's biggest exposure for liability is on the road. So having an umbrella to supplement your auto liability limits along with your personal liability limit from your home really just gives you added protection. And as your assets grow and your home being your biggest asset, it's important to protect that biggest asset. And the cost associated with a homeowner's with an umbrella policy, we're talking maybe $200 to $300 additional a year for $1 million umbrella. So the costs associated with an umbrella are minimal comparing to the actual coverages that are provided and the risk associated.
And now that you mentioned auto, Gino, I've always thought it's a good idea when home buyers are buying this big asset of the house to consider like bundling it with auto insurance. Are there discounts or bundling that one can get, like if you're providing a quote up front, or how does that work?
Absolutely. I always look to try to bundle coverages anytime we can. And there are 15 to 20% discounts by bundling your home with your auto with your umbrella. The more lines of coverages a carrier can insure for a client, the more coverages we can max out on all types of policies.
Okay, that makes sense. And so it's probably pretty common for someone buying a homeowners insurance. Like, what % of your clients who are getting homeowners insurance policies are you kind of typically providing auto for? Is it a pretty high percentage?
90%.
Okay, interesting. Okay, that makes sense.
Now there is a 10% of the the population that are my clients that love Geico, want to stay with Geico, and we work with that. It's a relationship business. My clients, is who I work for. I just represent the carriers as the insurance broker. So I try to do my best to make sure that my client is happy and comfortable with the carrier they have, and obviously making sure they're properly protected, and then getting the most price conscious policies out there.
It's actually a good point. Can you kind of talk about, like, for what you do? I always thought it's pretty neat, working with someone, like yourself as an insurance broker versus just working with, say, AAA only. But obviously AAA is a great company. My parents had AAA insurance for, decades, as many people. But kind of, can you highlight what are the differences that a home buyer should be aware of between the two?
Yeah, I mean, you have your household carriers, your Farmers, State Farms, AAAs, and those are great companies. Unfortunately, as a broker, I don't represent those companies, and the Farmers or State Farm agents of the world are the ones that represent those specific carriers and only offer that one product for their clients. We represent maybe over 10 different carriers. Okay. And some of those are going to be household names, your Travelers, your Nationwides, your Hartford, your Chubbs, your AIG, Berkshire Hathaway, all still very reputable companies. Maybe not as typical of a household name that we're familiar to seeing or on TV or hearing on, in the car through, an advertisement. But we work with only the most quality companies to make sure that, our clients are getting a reputable company and a carrier that will properly protect them and then step up to the plate when something does happen. And that's the key here. As a broker, I'm very involved and hands-on with all my clients through the claims process, to make sure that they are being, the claims process is being handled properly.
It's actually really nice. Like, so I've had, I had someone hit me in a car accident. I had to deal with, like, everyone with the 800 number. So it is cool that I hadn't realized that you're pretty involved with the claims process too.
Yeah, that's right. Yeah, I mean, we alleviate the 1-800 claims process. We will take care of that and get the details for you on our end. We kind of act as your license between you and the carrier, so that you have a professional that's working on your behalf.
Makes sense. Can you kind of talk about, like, if we shift gears, Gino, if someone's thinking about building a new house or doing a remodel, what are some of the things to be aware of? Are there certain, I know that there's the builder's risk policy. What are things that people should be aware of if they're going to be doing a significant project?
Yeah, great point. So anytime there is a rider in every homeowner's insurance policy that if more than 50% of the home is under construction and the home is vacated by the homeowners, there's a clause in the homeowner's policy that will not offer coverage while the home is being remodeled and under construction. Now, this is completely different if you decide to just remodel a bathroom and you're still living in your home, and you've had the option just to be able to live there, use another bathroom in the house while the other bathroom is being updated. That's not the situation here. The situation is when you really have, a true gut remodel renovation of your home. There needs to be a process of converting your homeowner's policy to what they call a builder's risk, also known as course of construction. And really, acts as a homeowner's policy, but offers the coverages you need while and during the renovation project. So
is that something, obviously if you're working with the licensed general contractor, which hopefully people are, they have their own insurance policy, and obviously, so they would have theirs, and then the homeowner would have their builder's risk policy.
Correct. Now, you got to keep in mind the general contractor that you hire has general liability insurance, or you hope. And, obviously you'd want to always work with somebody who does. And that general liability policy is going to cover any property damage or general liability or bodily injuries caused by that contractor during the course of construction. But what happens if the contractor wasn't responsible for the property damage? And,
what would be an example of that? Like someone coming in to the backyard at 10 p.m. and, hanging out.
Correct. The home was vandalized, after hours. Maybe there were some kids playing with some fireworks in the neighborhood, and one ended up in the backyard at night and caused a fire.
So that would be denied if you didn't have a builder's risk policy. Like that's not under the contractor's liability.
That's correct. That's correct. So that's why the builder's risk policy is extremely important on any time that you're doing a renovation to your home, because it's going to offer the proper property protection for your home.
Interesting. Let's shift gears. Can you kind of talk a little bit, Gino, about earthquake insurance? I know it used to be really expensive. I remember when we bought our first home 7 years ago, it was like $500 per month, and it was just kind of out of reach of what we could do at the time. And then prices dropped, maybe because more people were buying into it. And then it was like $200-300 a month, and then we took advantage of it. I've always been surprised, how many of my clients do not choose to buy it. However, some of my clients with like engineering backgrounds or structural engineering, like they 100% buy it. So like, can you kind of comment on like why it's a good thing, why it's expensive, what it covers and what deductibles are like?
Yeah, absolutely. Earthquake insurance, I feel like is extremely important because we live in the Bay Area. We've seen and lived through the 1989 earthquakes. We've learned about what the 1906 earthquakes have done to many parts of the Bay Area. And unfortunately, it's not about if, it's about when the next big earthquake comes. And so properly insuring your home means being responsible and trying to find ways to make sure that you're covered for any type of loss that may occur. Now, again, the homeowners is going to cover your fire, wind damage, theft, but the earthquake policy is strictly going to cover damage to your property by an earthquake event. Earthquake policies are a little different and they can be structured differently where you have let's say $1 million in coverage for your home. You're going to have a percentage deductible. And so, whereas you're used to on a homeowner's policy carrying maybe $1,000 or $5,000 deductible, earthquake policies carry percentage deductibles. So a standard percentage deductible on an earthquake policy is about 15%. So your out-of-pocket costs initially on $1 million in coverage could be a $150,000 deductible, which to a lot of people seems like a lot. But if there's an earthquake that causes major structural damage to your home and you don't have an earthquake policy, you could be looking at a lot more than just that 15% deductible to fix your home. So I do think earthquake policies should be considered. They should be at least quoted, and if it's in your budget, should be discussed upon each homeowner.
I had one client say to me once, Gino, and maybe it wasn't accurate, but they said, oh, well, if there's an earthquake, then my gas line's going to break and then my home's going to burn down and then my homeowner's insurance would cover that. Is that true, or just depends on what's going on, or There
is somewhat truth behind that. A fire that causes damage to your home that followed an earthquake would be covered under your homeowner's policy and would be considered fire damage and would be covered. However, nowadays, each city and county is coming up with, regulations to make sure that fires don't happen after an earthquake, because we're worried about,
thankfully,
the major losses, right? And cities burning up because we've got multiple fires that spread. A lot of homes nowadays are equipped with automatic gas shuttle valves. So when an earthquake happens, these valves are built into the home to automatically shut off the gas. These scenarios are becoming more and more unlikely of happening. And so, there is some truth behind that statement, Raziel, but I do
obviously
feel like
you don't want to go there, and
you don't
want to risk being denied coverage. So
absolutely,
yeah, curious. Yeah,
absolutely.
And I kind of briefly dwelled on it, or talked about it before, but like if someone's working with an insurance broker, obviously, I guess the benefit would be that you can quote many different carriers and you have more personal attention if there's a claim versus kind of working with the other. And obviously, it just kind of depends on what people want, right?
Absolutely. Absolutely. You know, the key here is that if we have a carrier that changes their guidelines, where they no longer want to write in a certain area, maybe their premiums have doubled because they've had to take a huge rate increase. You know, as a broker, it allows me to then find an alternative solution for my client. Being able to look and shop other carriers and see, you know, if there's a better option out there for my client. So what's great is I can get to continue to work with my clients, even if we change carriers. And, you know, a lot of times we like to establish a relationship between a carrier and a client, and not have to switch year after year. But, you know, there are a lot of things changing right now in the insurance industry. And there's nothing wrong with switching insurance carriers.
And can you talk about, you know, how like an insurance broker is paid, and does it cost more or the same to work with an insurance broker like yourself versus just like going to one of the insurance companies that you represent directly? Kind of how does that work?
Yeah, we don't charge any broker fees. So there's no additional cost for working with us. We absolutely 100% get our commissions paid to us from the carrier. So it's typically a percentage that each carrier will pay us based on the volume of business that we write with them. So again, you know, we're not, you know, the price that we give you is the same price that you would get from any other broker, or even going to direct in some instances. A lot of the carriers that we represent as brokers don't allow the consumer to go direct. But there are still a couple that allow. But that price that you would be paying direct would be no different than the price that you'd get from going through me. As a broker, I'm just providing the added value to my client, to my customer. And that added value really just is truly shown during a claims experience, where you have somebody that's representing you, working with the, you know, working on your behalf with the carrier to make sure that you're properly being covered.
That's actually a good point. I remember we were chatting a year or two ago, and you know, during the fires in the North Bay. Can you just briefly touch on like kind of what your involvement was, you know, with working with those clients? I'm sure it was crazy and sad and difficult, but like they would kind of call you, and what would that look like?
Yeah, I mean, that was one of the most challenging times in my career. Not because there was an abundance of claims, but it's really because my clients had lost their homes. They had nothing. You know, my goal was to be one of the first guys on the scene with boots on the ground, and to make sure that each carrier was going to go ahead and start the claims process to getting money in my client's hands. And that really is what it came down to. I wanted to make sure that my clients had a check in their hands within the first week or two of that disaster. And really that money was being used to find temporary housing, whether it was staying up at a hotel, or renting a house in a nearby neighborhood, or city, making sure that that financial burden was not being experienced from that family, or on that family. It was, you know, and that the insurance company was going to offer that money to help them throughout this tough time, in a proper timeline.
Thanks. Anything else that'd be helpful for people to know as they're watching this, Gino, or anything that we haven't covered?
Yeah, I mean, you know, if you haven't shopped your insurance in many years, I think it's a great opportunity and to do so. You know, there's so many different things changing. Auto rates are constantly changing. Homeowners rates are constantly changing. There's absolutely no costs associated with of shopping your insurance and seeing that there's a better option out there. So I would just say, if you've watched this video and you've learned a little something, I'm glad. I want to educate my clients on what they're purchasing, what it means to be covered through a homeowner's policy, and then hopefully that will allow us to have deeper conversations down the road.
Thanks, Gino.
Thank you, Raziel.